Let's talk a bit about Adani Energy Solutions, formerly known as Adani Transmission. This Indian electric power transmission company has seen rapid growth in the past, and in fact, as of the latest quarters, it's still in the double digits. If we compare this to Western utilities companies, we see 1% growth, maybe. It's basically flat. For example, comparing to AT&T in America for the mobile communications. So in terms of growth rate, this is quite interesting. However, when I did more research into this company with this whole bullish macro environment towards it, I find it quite hard to actually pinpoint and understand the numbers, as the accounting principles and the way of the reports are different in India compared to Europe and America. So that was an unexpected challenge. However, let's just walk through the bull case and then take a quick look at some of the numbers. In terms of the bull case, we know that the world needs more and more energy. It's not only India. We see this in America, for example, where currently 1% of the fleet of autos is electric, and as more and more cars become electric, we need larger transistors, we need more charging points, we need more power grid infrastructure, basically. Industry requires a lot of power, especially data centers, and we see some subsidiary here in this case for data centers when we look closer at the presentation for Adani Energy Solutions. So these are all bullish macro signals. We see a utility company located in an economy with a young population, rapid GDP growth, and a lot of future opportunities. And we see a track record clear as night and day with the double-digit growth. Although I also have to mention that there's been some confusion regarding the reporting, with the Hindenburg short seller report claiming that there's been some financial manipulation. It's hard to tell if this is the case, and these risk factors should make the stock cheaper, right, in terms of valuation. Although we see double-digit growth, in terms of price to earnings, it's still priced high at 76. This indicates that the market believe that there will be a lot of growth. We see execution risk. In terms of market cap here, 971 billion Indian rupees. And just looking at the financials for the latest quarter, we see 36 billion in revenue. So in terms of the profit and the revenue that you get, the bang for your buck, you're still paying quite an expensive price, even with this recent dip. And this is justified by some investors given the high growth rate. So in terms of investor relations, they have a lot of documents on the webpage, and we can take a look at the annual report, for example, and we see all of these subsidiaries listed. And in terms of accounting, we have the basic accounting and we have the accounting related to conglomerates. It has a special name, it's a special course, it's something you need special criteria for to be able to work with, and it's a lot more complex, basically. So we see all these subsidiaries, the way they sell services to each other internally, the way maybe somebody delivers a power transistor from Maharashtra to Sipat, these things and the way they are accounted for, it introduces an element of complexity when trying to figure out a picture of the business, trying to figure out what is actually going on. That's way beyond my current point of being able to understand and process financial information. So that's why, even though there's quite a bullish case to be made for this company given the macroeconomic environment, it's still something that I will avoid as an investor. Could they potentially go up a lot? Sure. Could they potentially drop a lot? Sure. And as with all investments, but however, it's really, really complex when we get into all of these subsidiaries and as well in an emerging market. And that's another thing, the fact that it's an emerging market and that the price to earnings is still this expensive, it's not discounted as much as I would like, is something that I need to flag as a bearish signal. For example, if you look at companies in South America, you can trade them at a hefty discount given all the insecurities in the region. So this is not something that we're seeing in the case of the Indian economy. We see that it's quite expensive, and we can speculate as to why this is. Perhaps there's a lot of emerging economy funds that are pumping their money into large cap companies such as Adani Energy Solutions, pushing up the price, giving a lot of risk appetite from wealthy investors from around the world. Maybe that's the case. It's really hard to know. And also, what's trendy? Energy is super trendy. I recently listened to a video by another creator on the platform talking about a EV company in Vietnam going public at a higher market cap than other established Western car brands. So it's quite interesting to see how the market is pricing different companies at the moment. And as we all know, Tesla also has a finger in the game, claiming to be part of a power company with the battery walls, etc. So this is a very trendy area currently, and I think it could get a lot more funding and investment from different parties. So in terms of the PowerPoint presentation, there's a ton of information on this one showing the different subsidiaries higher up, as well as the geographical footprint here of all the subsidiaries that we looked at in the previous slide. And we have this slide here with infrastructure and utility, where they also talk about Adani Connect, so data center. So this picture I recognize from accounting class, basically showing the percentages owned in different subsidiaries, and just trying to understand all the revenue streams here, even with it being drawn up for me, is still a complex task. However, if we look at the executive summary further down, we can see that they have system availability on the power grid upwards of 99.77%. This is better than California recently with the rolling blackouts that has been, and telling people not to use certain power consuming appliances in the home for some time to basically not overload the power grid. So interesting to see, although we will need a lot of larger transistors for the growing industries and the EVs in this case. Alright, so in terms of adding more infrastructure, we clearly see that they're doing this to the operational network. Is this a good or a bad figure? Well, the only way to know is to compare to previous quarters and see at what pace they're adding operational networks. So this requires even more work to analyze. This is one of the highlights, so I'm assuming that this is a good figure. Otherwise, management would not add it in the executive summary. They like to put up the highlights, and they like to put worse figures that might be a red flag under the carpet, so to say. So we need to be aware of this as investors, and that's why we really need to do our own due diligence all the time. Alright, so more power terms, supply reliability, great, super important, have the supply and also to be able to put it into the power grid basically when produced. If the power grid can't handle it, we're basically just dumping electricity, not utilizing it. And this is a huge bottleneck right now in the West as well with the transmission system. So good to see good reliability here. Also year-over-year growth here in the single digits in terms of units sold. I account for an uptick in energy demand. Alright, not quite sure what this means. And then also e-payment as a percentage of total collection, 78.5%. This is interesting, a sign in the emerging market. Not everybody is paying the bills online basically. Some will send the envelope of cash, I assume that this means. So there's even more opportunity here for profitability, an increase in profitability. It will be less expensive to collect via e-payments. It will be easier for the company to manage and keep track of payments. So this is a good sign, and the fact that there's even more potential for growth in this case means that there's even more potential for operational efficiency and greater profits and profit margin for the company going forward. I also noticed the profit margins was quite a bit of a red flag when I looked at the financials. So we see a net profit margin here of 4.7% for the quarter here of June 2023. And then if we look at another quarter, we see 11%, we see 13%, and then once again 6.34%. These large fluctuations make it hard to make a financial model and try to predict profitability. We want to put in the growth figure of the revenue and try to predict future cash flows. Then we of course need to look at the net profit margins to see the profitability coming from this revenue. And the more errors and variables and the higher variation we see in these numbers, the less our financial forecasts actually means. So in terms of being an investor and looking at this, I really hate uncertainty. But then again, uncertainty is also what brings up opportunities, as a lot of investors will value this company differently when looking at these numbers and putting in different numbers in their models for not only revenue growth, of course, but the profit margins and just the pure cash flow. And this really, I really want to take a gamble in this case, but I think that I should just stick to what I know. I don't have to swing at every stock that I analyze. Just wanted to highlight one of these companies that I think has a very bullish case. However, once I do more research into it, I see all of these red flags and things that I'm not able to understand in the presentations, and then it's just so much easier to not invest in the company and look to invest in some other place. It's not a loss, in my opinion, not investing in a stock that maybe goes to the moon and has a huge increase in share price. It's only a loss when you pick a stock and it goes down by a lot. Some people might argue, okay, it's the opportunity cost. You didn't choose this company that clearly had a very, very bullish case for it. However, there will be plenty of other companies that also have a very bullish case, especially in this economic environment where we've seen a drop by 80% or more in a lot of growth stocks. So just having cash and being able to invest when I spot an opportunity that I understand, I think is very important for me and my investing strategy going forward. And once again, I really hope you enjoyed this presentation, this analysis on Adani Energy Solutions, formerly Adani Transmissions. And as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.